Hi, this is Randy Finney with Right Side of the Chart, and this is an early session update for Monday, July 18th, 2022. It is 10:32 a.m. Eastern Time as I'm starting the video, so the market's now been trading for an hour, and I'm going to, in this video, here's what I'm going to cover, pretty much in this order. We'll cover the major stock indexes, the big three that I like to cover, the NASDAQ 100, S&P 500, and the Russell 2000 small caps. I'll cover both the ETFs and the futures for you. We'll do an update on those as well. The futures haven't covered in a little while. Then I'm going to segue into the euro, which is somewhat related. I'll get to that in a second, but we'll cover the euro, and then what's related to that, of course, are gold, precious metals, precious metal mining stocks is what I meant to say. GDX, which was the proxy there. And then also, I want to show you something that kind of ties in that you may or may not be aware of regarding the euro and the stock market. And really, and keep in mind too, guys, that my analysis on the euro, for whatever reason, I gyrate to it. The charts are clean. It is one currency, but I'll also look at the dollar, and for the most part, that is my quasi or even direct analysis on the US dollar. So when I keep talking about the euro, I know we're here and I'm in the States. A lot of you guys are in the States, some of you are overseas. But again, the euro and the dollar are inversely correlated. There's a one-to-one correlation, almost one-to-one, because the euro is by far the biggest component of the US dollar index. And so to be bullish on the euro is to be bearish on the dollar and vice versa. And then, of course, what I'm going to get to in this video is the relationships, either direct or inverse relationships it has on gold and the stock market. Finally, I'll do an update on the cryptos. You guys know my overall view, unless you're just catching up right now. But I've been, bullish equities for a while, and recently started talking about where we can really see some. I think we can continue to see a nice rally here, build on these gains if my fundamental, everything I'm going to talk about in this video is technicals, charts, but fundamentally I've laid out the case where I think there's maybe a kind of a paradigm shift or change in the collective thinking from, oh my gosh, not if there's going to be a recession, but how bad and how much lower is the stock market going. We're in a bear market. It's not far from over. And I think you're going to see that, and we've started to see, if you look at the headlines over the last just about week or so since I started that theory, is that we've already seen worries of a near certainty 1% hike in the Fed funds rate next week. The odds were that day last week when the hot inflation data came out, the odds peaked just over 80%, and they're now, as I mentioned today, down to 30%. So we quickly, as expected, faded that. And then there's the other component is everything, the consumer talks the bearish talk. They're worried about inflation. They're worried about the economy, worried about recession, but they're still spending. And that is the most important thing. You can say what you want about being a bear, about where you think the market's going to go. But if you're running up and buying a big screen TV and eating out at restaurants, the economy is going to benefit from that, and corporations are going to benefit. So here we are in earnings season. So we'll continue to see. We just got that underway, starting late last week, with the big banks now pretty much out of the way, and we'll conclude in a few weeks here, a couple of weeks actually, with big tech, and then we'll have a good idea which way the market wants to go. All right, let's dive into the charts. QQQ, remember, big picture again, just kind of a catch up or recap for those just coming in, is this in a large part, not exclusively, but in large part, has been formulating my bullish bias. Posted pivoting the day of the lows back there on June, whatever it was, 13th, I don't know, whatever the day the market's bottom, closing out all remaining shorts and going into longs and starting to build instead of build to if and as the evidence supported it. Now look, we're not out of the woods yet. It's been a nice rally off the bottom, but it's not even met my minimum swing targets, which I'm going to get to in a second, and more of my what I call quite likely or preferred longer term, swing or trend targets, which is all the way up here to approximately that downtrend line that my crosshairs are on, and or the either the 200-day moving averages. You have the exponentials lower because it's a faster moving, and then the 200-day simples above that. And again, if hit, that's gonna if and when hit, You got to move forward in time. You're talking probably a 20% rally off the lows, and so far we're about halfway there. We are. We last week or week before when we topped, it was about exactly a 10% rally off the lows, and I'm talking to my preferred index QQQ. So there we are, and success so far. Because at this point in time, if you bought those lows, there's no reason to allow a nice gain go to a loss. And again, everyone goes in at different levels, and some people actively trade like me, swing in and out. So everyone's going to have different cost basis and therefore different stops. Okay, so that's bigger picture. Let's step it down a little bit here to the 60-minute chart. A lot going on here. There's that larger trend line, but let's zoom in nice and tight. And here's what we have. Remember last week we had closed, we had this minor downtrend line right here. There was this more significant, more important trend line that goes back up to the left of the chart there. We had a breakout and back test. And so the breakout was a check mark for the bulls. The successful back test coming in, hitting it, was another check mark. We also had an uptrend line that's formed off the lows. We also successfully tested that last week, which was highlighted again as an objective entry. And so far, check, check, check. There's more check marks to come, and that is to build the bearish case. But if you bought the back test last week, it's already up. We're almost up 6%. And now the big level, this is a chart I got out to you this morning. I recolor coded the lines. Yellow are the salient or key important levels to watch nearby. And so this 296.83-ish right there, that is really, it's these two recent reaction highs. That's going to be a big level if popped. Now, I would much prefer not to see this negative divergence. So I do have to point that out, that if we equal, we've effectively equaled it. We're a hair lower if you want to really zoom in with a microscope. Still a little bit below those previous reaction highs, but for all intents and purposes, close enough to give you, a potential triple top with divergence. Now, I'm not a mechanical trader. A lot of people are saying just trade the charts, don't trade what you think. I try to anticipate which breakouts are going to fail, which rallies to resistance will get a reversal, and which rallies to resistance like this one might break out. So I favor a breakout, even if we have a reaction when we hit it fully. And even if it's a marginal new high, you're going to have that divergence. But again, there's volatility now, so we'll go back. I gave you the levels. These key levels are yellow lines, so that would be an objective long entry if we pull back to 292.30, or if we pull back to back test the trend line. And then I gave you this zone. You can scale in all the way down here to the uptrend line, but really not below is what I wouldn't do. I don't think we're going to get that. If where we're at, I think we're at that kind of paradigm shift I've talked about. And people are going to, bears are going to start realizing, oh man, the economy, the sky isn't falling like Henny Penny said it was. And they're going to start covering shorts, and then people are going to start stepping back in and realizing all these years they've talked about waiting for a 30%, 20% correction, or even 10% in Apple, Microsoft, Amazon. And now they have that and then some, but yet they're not buying. So those stocks are, again, they're certainly not dirt cheap by historical measures, but again, in a bull market, the primary bull market, again, going back to several videos ago, showing you my longest term uptrend lines, we're just basically back testing now. So anyways, you've got to probably get some more dip buyers, and that's what's been leading the way. It's those market leading FANG stocks, which have also showing bullish behavior recently, holding up, bottoming weeks ago, over months ago now, and still moving up. And that's it. So let's not overthink it. Now, again, to summarize what I'm saying, I know I sound like I'm all over the place here. Yeah, you've got resistance. You have right now big level there. And yes, if you pop it, initially, if you pop it soon, you're going to have negative divergence. But I think, as I said this morning, be quite bullish if we can pop that level. And even if we have a little back test or not, if we can take out this divergence, that's going to be very bullish and no longer have that negative divergence, which is usually the catalyst. I look for these divergent highs and divergent lows or swing trends. You can see them all right here. And if this one's taken out, oof, it should be good. So my next targets, 301, 305, and then we'll go from there. Those are the near-term swing targets. At that point, I'd expect a good amount of sellers to step in. I put good odds. that the initial tag of 305 is going to produce a tradable pullback or at least some consolidation there. We'll see if and when we get there how the charts look. So that's QQQ. SPY, the S&P 500. Let's go to this board here. And you can see we took out that near-term downtrend line right here today. Boom, gapped up above it. There's a breakout. There's your previous reaction high, and then the one below that. So right now you still have, for the bears, you've got your series of, what I'm circling here, higher or lower highs. 1, 2, 3, 4, 5. That one was lower than the last one, and this one. So if we turn down here, then the downtrend's intact. But on the flip side, you also have some higher lows so far. So it's kind of still anybody's game. But once we pop this, that's about 393 on SPY, and we start taking that out. And then of course, this one up here is a big one. That's when you have additional confirmation that this near-term uptrend off the recent lows is intact. And that would give you a target which correlates with that near-term target on QQQ, about 407 or so, 407 and a quarter on SPY. So let's see where we go there. IWM, and then I'll get to the futures. IWM, small caps, like I said late last week, looking to see a little game of catch up here because they've underperformed, as expected. I told you back when I, reverse at the lows that my preference was the NASDAQ 100 because I figured that those beat down beloved names, the FANGs, would see the most money coming in, and it has been. But everything, after a while you start to get a mean reversion, and things that lag tend to play a game of catch up. So you can see today the small caps are up about 1.5%, where the NASDAQ is up about 1%, and the S&P 500 is up about 3/4 or 0.7. So there's a downtrend line and a near-term target about 178.80 plus the downtrend line. And again, just look for these previous highs to get taken out, and then you'll probably see a good deal. You have the potential for a strong move up when that happens. A lot of shorts in here. I don't have to tell you that. We all know there's been a lot of bearishness over the last few weeks. And again, when you get a paradigm shift, when the masses collectively all of a sudden start to think like, oh wow, maybe the Fed's closer to being done than just getting started on rate hikes. That's sort of a little beginning of a trend I'm seeing over the last week or so here, and then you could see quite a rally there. All right, so that there's your near-term target for IWM. I'm just going to give you percentage terms, and that's about 9% or so. All right, futures, stock futures, NQ. See, this is my 60-minute chart NQ. I'm an active trader, so I've been trading as we've been in this kind of choppy range. I'll micro trade or do active in and out short trades while keeping a long bias and keeping my IRAs and longer term accounts long, but in the active trading account. If I see an opportunity for a quick pullback or to lighten positions, maybe take half off profits, then buy on a pullback. That's what I'll do. But here's what we need to do. Same, just like QQQ. You've got these previous highs that need to get taken out, and there's the comparable target, near-term target for QQQ or NQ that aligns with. Remember, it's this area of consolidation right here, back from late May to about mid-June. And that's what I'm targeting there. And then the one stop before that, I think this was the 301 level on QQQ. It's about 12,290, 12,289 on NQ. And this was the higher level on QQQ, which was, hold on one second. One second, I'm looking at another chart. Okay, yep, that was that should roughly align with the 301 target there. And this one should roughly align with that 315 target on QQQ. That's 12,452 on NQ. So there's my NQ chart. Let me just talk about being overbought. Let me go back to QQQ for you. 60-minute chart. Okay, most people, myself included, don't like to buy when things are overbought. You can see we're overbought here on the RSI. We are overbought there. We are overbought there. And that's usually not very favorable. Usually that's when you get a pullback. But after something is broken out overbought tends to become more overbought. So you first started getting overbought right here, which was right here. You had this little bull flag, right? And then what happened, if you would have shorted there, not only did you not make anything, you never even hardly got anywhere, but you got smoked and you probably got stopped out because the market continued to stay overbought, and it took this divergence when you started getting a little less overbought and you had negative divergence before that top was finally in. So what I'm getting at here is, yeah, we could pull back just like we did here and here, but we've already gotten to this level. This was now the third time, and usually the third time's a charm. So if we can break out, then what you're probably going to see is us run up to that next target, 301 or so, and then you probably have the RSI lag behind and PPO, and you might get some divergence there, get a pullback there, or go all the way up to 305. Like I said, I think it's going to be, there's a lot of, there'll probably be a lot of short covering if we can pop these highs, is my guess, and therefore, yeah, it's worth noting that we have the big negative divergences right now and overbought conditions. So obviously, if you don't have any positions, any longs, to go long now, I'm sorry, it's just not objective. I'm long, I'm going to stay long, but I'm not adding right here. I came into the weekend pretty darn long, and I'm going to stay there and wait till the next time to take some profits on those, and whether it's full profits and then buy a pullback or reverse short, we'll see. Again, the charts are dynamic, and so is my analysis. I can only tell you when we get to 301 or 305 what it looks like from there, if we even get there. And again, you guys know my targets. I gave it to you this morning. Any pullbacks, this is support level 1, 292 and change, and the downtrend line. Really like to see that hold if we do pull back to that level, but it's not absolutely necessary. What I don't want to see give way is the bottom, that uptrend line there, and then these are like kind of my line in the sand levels there, 275, 275.75 up to about 277.75. Okay, we're going to talk about the euro because that also segues somewhat into the next topic, which will be the miners and metals, but also has to do with the stock market. So all right, so yep, a few weeks back I thought we would hold this support level here. I mentioned as objective long, and we did. We bounced off it. We got an initial reaction, then we broke it. As I said and maintain and still do, I think that probably be a false breakdown and be quite bullish if that is the case. False breakdown means you go back above the support level you broke. Why? Why can't the euro just continue to fall? Well, it certainly can, but again, there's usually mean reversions. There always has been when things get very oversold, especially currencies. There's just natural market forces that kind of bring things back into play. Euro plummets too long and things are, the dollar's going up. It starts to hurt U.S. exports because our dollar's high, and it just, again, you're probably going to get a snapback. At the very least, we're going to bounce back, I think, to backtest those levels. And that's why right now we're just going off these 60-minute charts. Remember, I gave you a T3 up here. Today, potential T3, I labeled it as. I wrote that in on the screen software after, so let me just add it here. Just in case you want to continue to let this one run. So that's it. It was highlighted as a trade idea here. We broke out, put in an ever so slightly marginal new low, but it only extended the positive, aka bullish divergences, rallied up. We've hit my first target there, and now we've taken out the downtrend line, and we're starting to, a little work to be done, but starting to pop this. I think there's the potential for a massive short squeeze in the euro with all the bearishness that we've had lately, plus the Fed kind of now pivoting. Everyone thought for sure with those super hot inflation numbers, the bets were there, 80% chance of 1% rate hike. Now that's plummeted down to 30%. We'll know next week. And I'll tell you what, if they happen to give a one, they'll probably give some kind of indications, one and done for the time being. Market would rally on that. If they go to 75, yeah, they're going to say what they do is they'll continue to monitor, blah, 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 blah. But we'll just watch two things. Watch my real-time inflation gauges, commodity prices and all that, and also the economic indicators. As long as the consumer's holding up and spending, the stock market's not unlikely to crater. All right, so that's it. Next target's up here, whether we have a reaction here or not, a consolidation, pullback. I still favor a move up to my preferred swing target on the euro. If that happens, that should be net bullish for gold. And the mining stocks, of course, which brings me up back to GDX. I got a post out to you today. We have a potential, so I put a little question mark there. The day is still young, but I talked about this last week. Island cluster reversal. You can Google the term. That's when you have multiple candles. An island cluster bottom is just a single candle separated by gaps on both sides. Island cluster is two or more. I've seen them go for a week, about 10 days, and I've seen just two like that. So far, that's it. We have a gap, and we held. We're about a penny above backfilling. Well, the gap, if you look at where we closed, we're comfortably above it right now. So that's it. As long as we can build on this from here, if we have another green day tomorrow, and if this one closes green and we don't, come back down in there and close that gap out and then some. And as I said last week, the strategy is super simple. Super simple. You go long on the pop out. Even though it's not confirmed today, we could still fall back down. You can have a very tight stop. So the risk reward is phenomenal on this kind of trade. Why? Hey, the success ratio might not be. You may get stopped out. Let me just give you 50-50 odds if you want. Take that. But you're risking, to buy GDX here if you don't own it, and you're going to give yourself, let's say, a 1 point, let's just say you do it a 2% stop. Let's just say you give it a pretty healthy stop, right? Maybe it just doesn't play out perfect, but you come down here and then reverse. So a 2% stop loss to target. If my first target's hit, that's about 11%. If my second target's hit, that's about almost 20%. And if the bottom of my third target zone is hit, that's about 28%. Again, phenomenal risk reward ratio. I'll take that shot every day, and they're not all going to pan out, but when they do, that's trading. Put the odds in your favor. Positive divergence, which will be confirmed if we can build on today's gains. Big positive divergence. Last time we had a divergent low like this on GDX was right here, and if you bought that divergent low, you could have sold it 45% later, just a few months after that. So anyway, that's that. And remember that the euro and gold are inversely correlated. I've covered that many, many times. Don't look at it day to day or even week to week. Pull any chart, go back at least 10 years, and put up the euro and gold. You can do the US dollar and you're going to see the inverse correlation, but euro and gold are positively correlated because of that, because the dollar and gold are inversely correlated. And again, go back 10 years, you'll see the major trends. With few exceptions, it's an almost perfect correlation between there. Now, what most people might not realize, and let's talk about this, is the stock market. So, oh, no, let me do this. Let me do, we could do it this way. What is this? Oh, let me do SPX. Okay, here's the S&P 500. Here's what we're looking at right here. This in white. Right here, the white line is the S&P 500. Here, let me park this guy here. And the blue line is the euro. And what we're looking at here is a correlation. And what you're looking at is, you can see they're not always perfectly correlated, but for the most part, especially the big trends, you can see right here the S&P 500 peak, the euro peak, they both fell in unison right here to this low. They both bottomed exactly at that low and had a major trend. And look at all the little pullbacks along the way. Just compare this, look at these peaks, the little two troughs there. Now the euro did peak early here. This is FXE, that's the euro ETN, and started making lower lows. So there was divergence really, where the S&P continued to go up while the euro was falling, meaning the dollar was rallying. But then the S&P got the memo, and from there they were again near perfectly correlated. So about easily 80-85% of this chart, if not more, they had a near perfect correlation. And most importantly, they have been for months now, or all year. Let's just go back to the beginning of the year here. Okay, this is the beginning, January. Look at that perfect correlation there. So therefore, if I'm right on the call on the euro, I'm also going to be right on my call most likely on the stock market. So there's an additional reason right now, again, if you believe that the euro is, may have put in a significant bottom, then at least near term, then you want to be long euro in the stock market. And it's also positively correlated trade. I threw out the euro as a trade idea, and I've been long and bullish stocks for a while, so for last month or so. So to be in both you're not diversified very much. I threw out wheat today as a trade idea. That's a diversified trade. It doesn't have any correlation to the stock market. It does its own thing. But keep in mind these two. So I just wanted to say that helps to reinforce my near-term bullish outlook for the market, and therefore puts me in buy the dip mode, which goes back to where we're at today. So QQQ had a nice little fade at the open. You could have bought that. They faded it again, but so far they're holding up right here about this level, about 290. This is a 1-minute chart, by the way, guys. They're holding up right here about 294 on the 60-minute chart, and you can see, so that's a level you may want to watch intraday. And just an update on the metals themselves, obviously, because the euro's rallying. You can see gold's up today about 0.6%. That's GLD. Silver up nice 1.75%. I threw out palladium and platinum recently as trade ideas. Palladium up 0.82. Platinum was the most recent one. We traded that last up in palladium, but look at platinum, nice rocking today, up about almost 4%. Like to see that. And again, that was shown as both on the daily chart here. You got the PPO about poised to make a bullish crossover right there, and of course on the palladium or platinum futures, I also gave you, and that's PL. So yeah, I can't go over all these charts. That's why I don't always cover the futures, and it'll take forever. But here's PL. We've now hit that first target, which is this downtrend line on the 60-minute chart. Maybe reaction, maybe not. I'm going to stick with it for now. There's positive divergence. Next target, once the trend line is taken out, 878 roughly, and then 896.60ish right there. And last but not least, I've been, as you know, warming up on the cryptos, saying that we'd likely see a very powerful move in the cryptos if my stock market call was right, which so far so good. We're still at those previous highs. We got to break those out. If you break those out, you get more people coming into the market, shorts covering, more bulls coming in and buying. You're going to continue to morph into from a risk off to a risk on environment. And cryptos have had a near perfectly correlation with the stock market. They both topped back in November with the risk on Nasdaq 100 index topping back then. And I think they have a game to play of catch up here. So there's that trading range I highlight on Ethereum. This is ETHE, the actual crypto. We had a breakout last night. Nice move up in Ethereum right here. There's still my target right there, 1719. And again, if you don't trade cryptos themselves, you have ETCG is the Ethereum ETN. Up 35% right now. It was up about 50 this morning, 47% at the highs. And again, because that's what if you trade the futures or the actual crypto, not futures in this. I don't know if there's a futures contract. I couldn't find one when I looked a couple months back. Bitcoin there is, but see, you can see traders, they sold that gap right there. That's where it popped to. But we also took out the downtrend line. So any pullback to that level, you may or may not get it. The stock market breaks out soon, you're just going to continue to see people pile on these cryptos. Probably a lot of short covering. About $7 is support if it pulls back. Otherwise, I'd have to tweak these targets. I'll pull this one down here. These were targets on the way down. So about 980 and then 1160. Let's say ETHE is the other one. Grayscale Ethereum Trust. This is that trading range I highlighted. There's the breakout candle. Actually, on Friday, this one broke out and followed through today. And it actually, look at that, took out the gap today. And it's back testing this trend line from below right there. And then GBTC, Bitcoin Trust, same thing. It's had this little trading range right here. It's been consolidating in, like I said, building energy like a coiled spring. And then it's right at the top now. You can call that a breakout. I believe it'll be, again, unless the stock market just fails to break out of those recent highs. It's just like QQQ. Remember, I showed you those two previous reactions in QQQ? You got two previous reactions there. If we can take it out with conviction, meaning not a little pop and a failure, which would be a failed breakout, even if that happens, even if they sell it right now, we come back in, just look for another breakout, and then boom, a lot of upside potential as I've been saying in Bitcoin. Everybody's left it for dead with all these big crypto brokers collapsing lately, but about 25% upside from where we're at now, and that would be off that recent divergent low, the bottom of the range, which also said you could buy about 51% if hit. And then finally, last but not least, is Bitcoin futures. If you like the futures instead, BRR. Here we go. We have, this is a 3-month chart. I can go to a 6-month and show you it a little bit clearer. Let me do that. Then we'll wrap the video up. This is a 6-month chart, 2-hour candles, and you can see this is that recent trading range. And not just that, but you had nice positive divergence at these recent lows right here. That was a higher low, almost equal, so you could say those divergences were just extended if that's the way you want to go. And then those are still my targets up here. You have a big old bottom of the gap right there, and then the top of the gap, and that still gives you a nice, should correlate roughly with what I just showed you on GBTC, about 22 to 29, almost 30% if that's hit. And you also had a downtrend line that comes in there as well, that may come into play. So it's simple. It's risk on trade, either pans out or not. Chances are it's going to pan out if my call for more upside in the stock market pans out. You get more bang for your buck on this. I have a lot higher upside potential from here in percentage terms, but that cuts both ways. So you have to beta adjust your position size down, meaning you don't put as much in Bitcoin as you do into QQQ. And you don't need to, because if right, you're going to make more in percentage terms, which might correlate to the same dollar gain. But if wrong, you just have to give yourself wider stops when trading things like Bitcoin because of the extra volatility there. All right, let me wrap it up here, get out to you. Let me just look at my notes, make sure I covered everything. I've got we got the markets, the euro, the precious metals, Bitcoin, Ethereum. Okay, we're good. All right, this has been Randy Finney with Right Side of the Chart, and I will do another follow-up video or get some other charts out to you later today.